The 2026 recession is unavoidable. Prepare now. You can feel it, right? The whispers about a 2026 recession are turning into roars. Now, nobody has a crystal ball, but when the biggest names in finance start waving red flags, you have to pay attention. We're seeing sticky inflation in a labor market that's losing steam. In fact, JP Morgan just put the probability of a US recession by the end of 2026 at 35%. That's a 1 in 3 chance. For most people, that's terrifying news. They're going to watch their portfolios get absolutely decimated. But a few smart investors are doing the exact opposite of panicking. They're using a simple 3-step defensive plan to not only protect every dollar they have, but to get ready for the massive recovery that always follows a crash. In this video, I'm giving you that exact blueprint. Section 1, the problem and the blueprint. Let's get one thing straight. Defensive investing is not about stuffing your cash under a mattress. It's a proven strategy for protecting your money when markets get crazy. Instead of trying to time the market, which is impossible, you build a portfolio that's designed to have an iron shield during a downturn. The goal is simple: ride out the storm so you can come out stronger. Believe it or not, recessions are a totally natural part of the economy, and they create unbelievable opportunities for investors who are ready to buy amazing companies for a huge discount. And this isn't some complex strategy for Wall Street pros. It's a simple 3-step blueprint that absolutely anyone can use. Section 2. Step 1. Build your defensive foundation. Alright, step 1 is about building a fortress for your money. This means putting a chunk of your portfolio into sectors with what's called inelastic demand. That's just a fancy way of saying companies that sell stuff people have to buy, whether the economy is good or bad. We're talking about consumer staples, healthcare, and utilities. Think about it. People will always buy groceries, they'll always need medicine, and they'll definitely keep paying their electricity bills. These are the last things people cut from their budgets. For anyone starting out, a good rule is to put about 20 to 30% of your portfolio into these defensive stocks. This acts like an anchor, giving you stability while the rest of the market is going nuts. By the way, if you're getting value from this blueprint, do me a huge favor and smash that like button. It tells YouTube I'm doing a good job and helps me get this video out to more people who need to see it. Thanks. Section 3, Step 2. Add your secret weapons, bonds and gold. Step 2 is all about adding some serious armor to your portfolio with high-quality bonds and gold. During a big market crash, stocks and bonds usually move in opposite directions. As investors get scared and sell stocks, they run for the safety of high-quality government and corporate bonds, which makes them go up. This creates a cushion that can literally save your portfolio from big losses. And then there's gold. For centuries, gold has been the ultimate safe haven asset. It's not tied to any single country or currency. When people lose faith in paper money, they run to gold because you can't just print more of it. A lot of pros recommend putting about 10 to 15% of your portfolio into gold to make it way more resilient. Section 4, Step 3. Focus on quality and rebalance like a pro. This final step is all about discipline, and it's what separates the winners from the losers. First, you have to focus on quality. Only invest in companies with rock-solid financials, a history of making money, and, this is key, a history of paying dividends. Dividend stocks are amazing because they pay you a steady stream of income even when the stock price is down. Second, and this is the most important part of the whole video, you must have a rebalancing plan. Rebalancing is just selling some assets that have gone up and buying more of the ones that have gone down to get back to your target percentages. This simple move forces you to be logical instead of emotional. When everyone else is panic selling, your plan will have you buying incredible companies at a massive discount. This is how you avoid the single biggest mistake that destroys most investors. Conclusion. So that's the blueprint. Let's do a quick fire recap. 1. Build your foundation with defensive stocks in sectors like consumer staples, healthcare, and utilities. 2. Add your armor with high-quality bonds and gold to protect against volatility. 3. Stay disciplined, focus on quality companies, and rebalance your portfolio no matter what. Look, no portfolio is 100% recession proof, but using this strategy will drastically reduce your risk and put you in a position of power. A recession isn't just a threat, it's an opportunity. If you prepare now, you won't just protect your money, you'll be ready to seize the life-changing opportunities that are right around the corner.